For the past 8 years, since 2011, the US dollar has generally been a pretty strong currency, with the dollar index heading northward versus most other currencies. However, there are two reasons to think that this period of dollar bullishness may be coming to an end, and that the US currency may be turning a corner towards a bear market. Those two reasons are first, an expansion of deficits, and secondly, interest rates. When it comes to deficits, the US dollar typically follows the so-called twin deficits. In other words, the budget deficit plus the trade deficit. When those deficits are getting smaller, usually the US dollar rallies. When those deficits are getting bigger, however, the US dollar often comes under downward pressure, as was the case during the 1980s and again between 2002 and 2011, the last time the USD suffered a major bear market. However, this time interest rates are also becoming an issue as well. Part of the reason why the US dollar has defied growing budget and trade deficits for the past few years is that the Federal Reserve was first of all increasing interest rates, and then secondly keeping them significantly higher than interest rates in most other central banks around the world. Now, however, that's about to change. By all appearances, the Federal Reserve is now on the precipice of perhaps reducing interest rates, maybe even quite substantially. In that case, the interest rates that were pulling the dollar higher and allowing it to defy expanding deficits will now be pulling in the same direction as those deficits, pulling it downward. But this raises an interesting question. If the US dollar becomes a weak currency, who becomes a strong currency? And we think that there are four likely candidates to become a strong currency: the British pound, the euro, the Swiss franc, and the Japanese yen. Of those four currencies, the British pound is a sort of category of its own. The British pound has been extremely depressed for the past few years because of the cloud of Brexit hanging over the currency. However, one day, whether it's between now and October 31st this year or at a later date, presumably that cloud will be lifted one way or another, perhaps allowing the British pound to rally substantially versus the US dollar and maybe against a basket of other currencies as well. Be warned, however, if there is a hard Brexit or a no-deal Brexit, it's possible that the pound could take a dive. So it's not certain that the pound will be a strong currency. The other three currencies, though, all share one thing in common, which is that all three central banks, the Swiss National Bank, the European Central Bank, and the Bank of Japan, all have negative deposit rates and all have undergone massive balance sheet expansions. Now, none of these three areas, the Eurozone, Switzerland, or Japan, need or even should have higher currencies. They all have inflation rates and economic growth that are well below target. However, given that the central banks are stuck at interest rates below zero and they all have massive balance sheets, if the dollar begins to go downward, their central banks may be hard-pressed to prevent their currencies from rising, even if rising currencies are not what their economies need. I'm Eric Norland, Senior Economist with CME Group in London.